Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you've all had a smashing Sunday. We're going to do a number of things in this video. We're going to be preparing you guys for the week ahead. Of course, in yesterday's video, we looked at, and actually the past two previous daily cryptocurrency and general market update videos that we've given every single day at 1 p.m. UK time, which is GMT. We looked at inflation. We looked at yesterday in more detail CPI expectations for Thursday, which is the US CPI. This is going to move markets. We know that markets have sold off due to a high inflation and the Fed essentially bringing a new regime of a very restrictive monetary policy about. And essentially, you know, we've shown you this time and time again, go and look at interest rates, go and look at Fed funds futures and markets. They all sold off in preempt of this. This is, of course, investing is all a game of liquidity. It's all a game of money and following that money and where it's going. And of course, the Fed have redirected a lot of that money back into the debt markets, you know, because the debt market is so colossal and it now has a higher yield on it, an unbearable yield, actually, in many cases. And I believe that in the monetary system that we currently have, it has to continue to be inflationary. When we have periods of a deflationary system, it crumbles upon itself. So it has to continue to inflate, and you have to have a low interest rate in order for it to work. Otherwise, it just doesn't. So we will, in my opinion, unless the system just completely implodes and we have to move on to something else, which isn't out the realms of possibility, but that's for another video. We have to move back to, basically zero interest rates. The debt that's out there is not sustainable at these levels. And it's why we're seeing continuous pain across the board. So we will be preparing you for that. We're going to talk about the fact, you know, over the past week, really, I've been saying actually where we currently are in terms of the market, I wouldn't describe myself as overly bearish here, even though the macroeconomic landscape is a shit one. We've been the grisliest of bears throughout 2022. And we've tried to keep people out of markets, even though this channel is absolutely non-advisory. I'm not a financial advisor. I don't have the registration for that. You know, you need to register to be a legal financial advisor. And that's I'm not that. I don't have those qualifications, if you will. However, I'm certainly a speculator. I'm an active investor and a trader, and you know this is what I have been doing for a living now for a while. So we've tried to keep people on the right side of markets with our opinions, and you know we get some beautiful comments to say that we've done that certainly over the last year, and it's a new year, and we're trying to sort of predict what's going to happen this year, and it's very hard. And I think because I've came out and said I'm not bearish, people have instantly took that as, oh well, he must be bullish. No. I just don't understand being bearish, or as bearish as I have previously been, you know, from March last year down, as back then. You know, a lot of the damage has played out. You've got to remember that, yes, we haven't seen the full effects of a recession and the full effects of what's coming, and we can all see it, but markets are forward-looking. So markets started to price in interest rates before we had those interest rates. They preempt. You know, a fund manager and a hedge fund, it's all about hedging your bets, right? I'm sure everybody's watching the Bernie Madoff documentary at the moment. It's brilliant. You know, it's about hedging, and it's about trying to predict what's coming down the road. And this is why markets move in the manner that they do. It's often why on bad news you'll get a rally, because the market's already priced in that bad news, and vice versa. So that's just, you know, really this channel, I want people to learn, you know, investing and finance has changed my life. You know, my original trade is dental. And, you know, this is something that I've been doing now for 5 years, and I'm very passionate about it. And I want to, I don't want people to be given a fish. I want them to learn to go and get that fish themselves and be able to feed themselves and their own family. And that's really what this channel's all about. So we're going to be preparing people for the week ahead a little bit. We're going to be doing a number of things, because it's very obvious that we're in a sort of macroeconomic shitstorm. And this is all based on interest rates. You know, Bank of England said, look, we're predicting like a 2-3 year recession. Everybody's looking for this horrible crash, and the yield curve's predicting it. And I think you're going to get it. But I also want to be the devil's advocate. And I want to say that when I see peak bearishness in the markets, when I see huge record net outflows and net shorts, I get a little bit nervous as somebody who has a net short position in the cryptocurrency market. This is the USDT dominance. So this is the lion's share, or not the lion's share. This is the market share of USDT in the cryptocurrency space. And you can see it's at a pretty all-time high level. Everybody's in stablecoins. In fact, if you look in the United States, there's a record amount of cash. Okay, there's a lot of also, in many cases, records amounts of credit and a number of other things that now has this huge interest bearing. But everybody's in cash. Or I shouldn't say everybody's in cash because I cannot say that with 100% certainty. What I can say with certainty is we're at a high point for US dollar USDT dominance. We'll look at a couple of stable coins, guys, and then we'll move on to the week ahead. And if you look at actually cash, we're at a high point for people holding cash. Because everybody's expecting the same thing. I see all these YouTubers that were bullish, literally turned bearish after the FTX crash. They gave up on their bullish narrative. They said, okay, we're going to have to admit defeat. You've done that at the wrong time. Be humble. I am going to say this. We're all mere mortals at the end of the day, guys. We're never going to get every single call 100% right. We're going to do our best. And yes, and last year we got things majority right. We got how the bull market ended wrong. This year we're going to try and get things right, but we're not going to get everything right. But what the point I'm making here is, do not try and burden yourselves with being perfect. We are not perfect. You are never going to get the best hedge fund managers in the world that have been doing this for longer than I've been alive, get things wrong consistently all the time, but they know how to hedge that risk. That's why they're hedge fund managers. Yet, I get people in the comment section and I see YouTubers who I wouldn't trust to organize a chimp's tea party or a bloody children's birthday party, trying to predict things with 100% accuracy and make it look to the public like they get everything right and they know exactly what's going to happen. The truth is you don't. What we're doing on this channel and what I'm trying to teach people to do is come up with the best sort of probability scenario and be a critical thinker. Don't just take things as gospel. Always do your own thinking and try and navigate things for yourselves and own your own outcomes. Because if you blame somebody else every single time something doesn't go in your favor, I can guarantee you are not going to get very far in life. We want fishermen. We don't want people who are just dependent on fish. So with all that being said, for me right now, where I'm at personally, and this is something I'm discussing in great length with my patrons and going to be aggressively discussing, we're at a record high for stablecoin dominance. Let's look at USD. Let's look at USDC dominance. Yep, we're at a record high. BUSD we can look at. Is there Dom minutes? Maybe not. We'll do that. No, okay. So we'll just stick with what we've got. This is USDC dominance. I don't want to look at DAI. Oh, I suppose maybe DAI might give us. No, we don't have DAI dominance. .D. Yeah, there we go. Stablecoin dominance. We're at a record high for stablecoins in terms of dominance. So most people are now sat in stables. And that means that most people are net short crypto. Look at your YouTubers right now and what they're saying. One more leg lower, one more leg lower. It's kind of like 4 more years. I can't help but get very nervous when everyone's looking at the same thing because markets lean towards pain. So I am not saying, and I got lots of comments saying, well, you've been so bearish. You've been, the doomsday prepper. I still am to a degree. I think the financial system is a feeble one that's destined to fail. But when you're talking about markets, the obvious is often not what happens. Okay, yeah, there are exceptions that sometimes, and maybe this is an exception. Okay, March 2020 onwards, when they printed a load of money, it was obvious that things were going to go up in the manner that they did. But to me, if I'd only paid a little bit more attention and not been on the sort of side of the herd, which I was here, you know, we'd have caught this. And there's a number of things that we are looking at. I'll bring the RSI up quickly and you guys can decipher maybe what I'm looking at here for yourselves. I don't like being on the side of everybody in this kind. I'm just trying to think free ball here and sort of think with you guys. I'm not quite comfortable being a super bear here with everyone. And you will get, I did get somebody say, oh, well, everybody's bullish. What are you talking about? Maybe people are calling for a rally, and I'm not calling for a new bull market here. I'm not bullish. I'm not bearish. I'm neutral. So even though actually, to be fair, we're still cash position heavy, so maybe we're more biased downside still, and that's probably how it's going to stay. And that's because of the sort of macroeconomic situation. Good morning from Germany, where housing market has come to a standstill. Monthly mortgage lending has collapsed by 40% in November, year on year, representing third negative record in a row since the start of 2003. You know, we can look at all this. Market mayhem, we're not yet at extreme bearishness. So I don't think the worst. I think the worst is behind us, but I don't think the bear market's over. But what I'm saying to you guys, being 100% transparent here, is that you know, we've been doing daily market analysis on Bitcoin, which I'll get back to. We've killed it this year, by the way, guys, in terms of predicting. This is something we drew. I mean, they just don't give you daily TA like we do, guys. We do daily range analysis. Something I'm going to be teaching my Patreons, because anybody that's interested in trading, you know, day trading is one of the hardest things I've ever done. And the reason being is because you go into it thinking you know what how the market works, and actually the market works in weird and wonderful ways, and you need a metric to weigh up how things move on a daily basis, and signals that give you results. And you weigh up us. Anyway, getting off topic, but we called for a rally here up to here, and we called for this rally. Well, we actually said we don't know where exactly it will get to, but we did call for a. We didn't say it was going to get exactly here, but this was one of the targets. We did actually have higher targets as well that didn't get met. It fell short. But the reason we knew a rally was coming here was because of just how bearish everybody was. And actually, what I'd like to do is, and I'll use USDT, and you'll go, well, why are you showing this stablecoin dominance? What is, are you a fool? What are you on about? Put this with the Bitcoin chart. USDT is a good one because I trade USDT for the derivatives market. Let's get Bitcoin up. Look at where your bear market started and what happened with USDT. I'm just trying to get you guys to, and some of you definitely do it. Look at the coordination here. It's kind of like looking at the Dixie and Bitcoin, but actually probably even more so. So stablecoins continue to go up, you know, as we go down. Take of this what you will. It's just me saying I don't think it makes too much sense. I was going to look at this, but I'm going to get into depth with this later on in my weekly meeting. I still think there's more downside to come, guys. I think the CPI on Thursday, this is the main event that you need to look out for the week ahead, is going to be very telling. But I've got to admit, I'm not as bearish here as I once was. And people will get annoyed at that and say, well, what are you talking about? You can't say you're not bearish. You've been bearish for so long. How can you do that? You need to... So I got how the bull market ended wrong. I was actually looking for higher prices. I didn't get those. Down here, I had to swallow my pride around about March and say, okay, I was wrong on how the bull market ended. We're now going to get on the winning team. Not doing that. I'm not saying the winning team now is to be bullish, by the way, here, by any stretch of the imagination. We still have a yield curve that is predicting a March 2020 Lehman's 2008 dot-com bubble burst moment. And I think that's coming. You know, it's probably going to come in the form of a sovereign debt crisis. And if that happens, guys, woo, you're going to, I mean, but then the dollar itself, you know, where are you safe? Gold, maybe. But then the paper price of gold will go down because people will be getting liquidity out of anything. So everything will crash on that. But as somebody who's looking to invest in the crypto space for the long-term time horizon, somebody believes in this space, and we've got a video coming out later on today from the reporting on the World Economic Forum, and what they have to say about the cryptocurrency market. similar thing to what Larry Fink said. We've all been or I've been reporting it on this channel. You know, I just can't help but sort of look at things and go, I think being sort of neutral at this point is even though we have our position is still cash, so we're still expecting more downside. We need to start thinking critically about where we are in terms of this market, in terms of this bear market, and where we are moving forwards, and what's the downside risk, what's the upside risk, and so on and so forth. So hopefully this video has helped you guys out a little bit. That's my intentions with it. On that note, I'm going to love and leave you. If you have enjoyed the content, a like is always greatly appreciated. So is a comment, and I'll see you all in the next YouTube video. Thanks a lot for watching, ladies and gents.